Hey, are you thinking about buying or selling a business? Join us May 3rd for the M&A Launchpad Conference. This is the premier conference for entrepreneurs, investors, navigating mergers and acquisitions in the lower middle market. You're going to connect with top deal makers, gain insight strategies to take your business search and your business acquisitions to the next level. So get your tickets now at malaunchpad.com and use the code LAUNCH for $200 off your ticket. We're looking forward to seeing you.
Today's episode, we interviewed Stephen Marks, where we talked a lot about due diligence, labor, and nearshoring, and how to really be able to take advantage of just kind of, the lower cost of living in other countries to be able to get good quality work, right, at a fraction of the cost. And so if you're out there looking to buy a business, really concerned about those due diligence costs, we kind of dive right into a lot of the ways to kind of help mitigate those and get better pricing. So Casey, what was some of your takeaways?
Yeah, no, Stephen, coming from the family office background, understanding the language, he does his own investments through his capital side, but really understanding that labor conversation, right? Because a lot of us think that we have to do everything on US dollar prices. And then there's just so many other things, if you have the right group, that can help you get through it for a fraction of the cost. Just really, really good to know that there's a team and there's a group out there, because we may, some of us, we push to close a deal because it's very expensive to get through due diligence. And if you could get to a quarter of that due diligence cost, then get through maybe more than one or two deals, it's a game changer.
Or you skip a step or two, right? Because again, the cost. And so if you could still do that step and get good value from it, right, it makes it a lot easier. And I think the other good thing to think about is, they've seen a lot, they've done a lot, and so they can cross-pollinate knowledge. And so, you're buying a civil engineering firm. Well, we did this architecture firm, and here's why that deal blew up, right?
And we have employees to help you there too, right? Because
Yeah.
if I have to hire a civil engineer, it can be very expensive, and I may not need that. And so really opens us up to even thinking about the buy box a little bit, using outsourced labor. It's pretty amazing.
Yeah, so this episode will help you kind of think about just expanding your labor box. So listen in.
Hey guys, go ahead and just pause the podcast for a second. When you're buying a business, you need to ensure the financial health of the company. The quality of earnings is mission critical. It doesn't matter what size business you're buying. Patrick O'Connell Advisory Group, they're dynamic. They do a great job. They're going to look over your shoulder. They're going to make sure that you're doing the right thing. And this guy's done over 200 buyers successfully, just like you. So reach out to him. And it's O'ConnellAdvisoryGroup.com. Click the link in our show notes. Can't live without this.
Hey, Stephen, welcome to the show.
Hey guys, really happy to be here.
Yeah, so I know we had a great conversation here right before we jumped in, and we've got a lot to talk about that's going to benefit, a lot of the people that are looking for labor, and we're going to get into some good stuff. But Stephen, why don't you tell our listeners about yourself, your company, and what you're looking for?
Absolutely. So I have a bit of a unique journey. It started off really in the family office space, out of Chicago, Midwest. Think lower middle market, M&A, and real estate. The portfolios were very heavy on those types of assets. And I was at a very early age, was put in a position of portfolio management. And I really learned a lot through that initial journey of how things get transacted in the lower middle market, how family offices structure themselves, how they become efficient and resourceful. And really, I've sort of applied that across my career. I also discovered at that time that I'm an entrepreneur, and I sort of knew it prior to this work experience. I started my first company when I was 17, and have formed a number of businesses after that point. But really, the experience of working with the family offices, it accelerated my learning and education into, I think, what was possible at that time in the United States. But what was interesting about it is that I then started to get pulled into, let's call it cross-border M&A, starting in particular in the Mexican market. Some of these same family offices owned assets in northern Mexico. This was early 2000s, mid 2000s, post NAFTA. So a lot of production going into that region. And I've been a Spanish speaker since high school. And there's that pull on the international side that always appealed to me because it was just different and unique and challenging. And sometimes things can be very vanilla in the United States, a middle market transaction. It's okay. We take it get a quality of earnings, and then let's take it to the bankers, and then we underwrite the deal, and all of those things. Well, I like it when there's a little bit of hair on it. So what are the challenges, and how can you overcome those opportunities and then really derive some value? So the next step in that journey is I actually created an advisory business called Emmersion. Been operating that business for over 15 years, where I work with middle market companies, lower middle market investors as well, private equity, family offices, and helping them both domestically in the US, but then also with a nearshore component in the Latin American market. So that was the start of really what became Emmersion Capital, which is now a series of companies that we own with some outside partners that really take advantage of a few things that the nearshore has to offer. And the big one, in my opinion, is really labor and technical labor to support M&A and the lower middle market in the United States.
All right. So there's a lot to unpack there. So really quick, so you happen to be in Latin America, right? Initially doing what? Let's just kind of really break it down for people.
So let's starting on the portfolio management side, it was either managing the assets in Mexico and other parts of Latin America
that clients were going to buy, right?
Exactly. They were going to buy or they were going to divest. And I was positioned to help advise those groups on those acquisitions. Like I said, I'm a Spanish speaker. I have some really good relationships in markets like Mexico and Colombia and Chile and Brazil. And I was put in a position at a very young age to work with those family offices to advise them and help support that M&A.
Yeah, so a company wants to go buy a stone production company in Mexico. Let's just make that up, right? You're there to advise them. As part of building out your team, you started to hire on your own labor that happened to be essentially in Mexico based, right, in this example. And then that's ultimately where you saw the opportunity as they were asking you, hey, how do we get to leverage your team? And you kind of realize the opportunity that, hey, maybe there's something here to start this kind of nearshoring ability of labor.
Exactly.
Did I get that right? All right.
Yeah.
Just trying to ground the listeners here. Okay.
Yeah, you got it. So it started off very organically. I had also been a part of some transactions where middle market companies in the US were moving their operations from Asia into destinations like Colombia and Mexico, Costa Rica, because there had been a pivot from Asia to more, let's call it US centric or time zone aligned markets. And through those experiences, we started to really see that there was an opportunity to take advantage of the local, let's say the local talent pool that wasn't being used in the right way, I guess, in these local markets, and apply them into the US market. But it started off very organically, just as an idea.
Okay.
One of the things kind of just off of that, talking about family office, right? So the guys that I've known that have been taught in the family office mindset, you really get a great perspective on, the family office is about wealth preservation, right? They're not trying to get a 10X. I mean, they have some allocation for that, but you've got to be thinking on your investment strategy more of that, hey, I don't want to lose money, right? I want to be able to preserve money and get a good yield. So with your business and all you're doing in this M&A side, so taking from when you grew up in the family office side, how's that helped you? Like, have you created kind of your philosophy around how you invest and how you think based as if you were a family office yourself?
Absolutely. I would say that I'm more like a family office than I am private equity in so many ways that I operate, because of what I learned in my first work experience. And really it is, I think that wealth preservation topic is so accurate, because that's what a lot of these family offices do. Their horizon, in some cases, they may not even have a horizon. They just might be holding some of their assets for the next generation or the generation after that. To your point, Casey, like in some cases, yeah, they do have their buy and build and flip strategies as well.
Sure.
But really, for the most part, it's about building long-term wealth. And then also, I'd say another point, which is being resourceful. A lot of these groups are very resourceful in how they use let's call it their holding structure or their family offices available resources and talent, and apply it across the portfolio. So yeah, I think I took a lot from that experience.
Yeah, I was meeting with a guy the other day. He's in the private credit side, and he was in family office for about 8 years. My uncle is a part of that family office. It was a small world, and we had that conversation, and he was like, "Man, that family is all about like the discipline that they taught me about investment and how we evaluate and all that stuff." He goes, "It's allowed me to to grow my career in this space." I just, so it's fascinating because I did not come from the family office side. I'm the high risk, high reward entrepreneur that's trying to strike the gold mine. And so the mindsets are very different, but raising capital and talking to a family office, you have to know how to communicate to them because they have different desires and needs than I do as an entrepreneur. And Feras and I run really we operate as an independent sponsor. And so when we do run across the family office conversations, there's certain product that we can bring to them, and there's just certain things that isn't going to ever make sense for their capital. It may be a great deal, but it doesn't mean it's going to be a good investment for them.
Yeah. I would also add too, I think that there's some flexibility in terms of how they approach their investments that sometimes doesn't exist in the private equity space, where because those middle market private equity funds are reporting to LPs, and especially the larger ones where they have institutional backing, their buy box is really tight. Whereas what I've seen in the family office space, there are certain criteria that they do want to stay within, but there's also an understanding of, hey, we're backing this sponsor. So who is this sponsor? Who are we investing into? And why would that maybe make more sense than just the business itself? I don't know if that makes any sense, but they're looking at things more holistically, I think, rather than just, hey, what is the business? What are the returns? And how are we gonna realize that return in the next 7 years?
No, I mean, people need to understand risk-adjusted returns, right? A family office already has money. It's not about creating new money as much as it is about making sure the current money doesn't get lost, both in terms of principal or even lost inflation, right? Like that is their barometer, and then you're building on that. And so
you got it.
So maybe to kind of shift it back from the family office conversation, right? So, you kind of mentioned, obviously you saw the opportunity, right, to start to nearshore, right, labor. Did you start that from scratch, or sounds like you did a few acquisitions, right? And so what was that first acquisition? What did it look like? And, how has that kind of gone?
So the way it actually started was very organically. And it was almost serendipitous from the perspective of our advisory clients had a technical need for, let's say, financial analysts or accounting support or whatever it might be. They were looking for cost savings as well. They were looking to solve, let's call it that labor issue that was impacting them. And what they noticed is that through our company Emmersion, our advisory business, is that we were able to provide solutions beyond just an acquisition. So, okay, we have an acquisition. We're going to support you in due diligence. We'll support with the integration. And then usually an advisor, they're out. But in this case, we started to notice that they were coming back and they're like, hey, remember that analyst that helped us out with due diligence? Maybe we could deploy them on a long-term basis to help build this business that we just acquired. And so it started off that way. It actually was very, very organic. And then we took it step by step. So we started with the financial services segment because we thought, well, most of our clients on the advisory side, private equity, independent sponsors, family offices who are doing acquisitions, we know that space. So we started offering that talent as a service. And then from there, we started adding things like engineering, IT engineering, cybersecurity. Then we started getting I get diversifying a little bit more into things like civil and commercial engineering, architecture, fire protection, because we noticed that this was just this recurring theme around having a need after an acquisition. Hey, we want to grow this business. We want to make it more efficient. Well, we can't find any civil engineers to grow the business that we just acquired. But and if we did, we're paying them US rates, so it's already going to be a little expensive. What if we were to dip into the Latin American market, find sustainable solutions there that we could then deploy, which will make us more efficient and solve our labor issue? So it started with organic growth. And then at that point, we started looking at, okay, well, what can we do with joint ventures? What can we do? We sold a minority piece of the business to a family office in Colombia, who owns one of the largest privately held recruiting and HR firms called Listos in Latin America. So we had a strategic partner who could help us recruit. So yeah, it really started more organically versus acquisition.
Got it. And so then, as you guys have scaled that into that, right? So today, really, what does the company look like, right? Like maybe two questions. How does a prospective customer come to you, and how do you go find a prospective customer?
What historically it has started with the advisory side of our business. So let's say US lower middle market, private equity, independent sponsors, family offices who are looking for some support for an acquisition. Could be quality of earnings support, could be high level due diligence, just analyzing numbers, looking at financials, developing projections, financial models. And that always transitions into some other function. And I've said this before to our team. The company's called Apertura. We've said this before to the team that when we start with one service, it's like the client gets it. And then it leads into other services, other verticals, other labor pools. And so where we're at now is that we're continuing to add more and more services. We're recruiting and we have talent in probably 10 or 12 different countries, heavy in Colombia, Brazil, Ecuador as well. We have some cybersecurity analysts there. And now it's turned into a service. So we have inbound lower middle market companies, middle market companies who are coming to us saying, hey, we want to hire a bunch of cybersecurity analysts. We have no idea how to do it in Latin America.
Got it. And so you guys are very active in just, kind of placing heads into roles, right, as needed. So
exactly. We have to adapt to whatever the client might need because each scenario is very different. And
they have to be well trained, right? It's not just a generic. It has to be a trained, not only in their discipline, but then even trained to that customer, right? So not easy by any means, right? But it's getting the right head in the right seat. Maybe it's the better way to put it.
Stephen, we have an experience ourselves with nearshore, with the near sourcing model. So I have a good friend of mine. I should connect you with him. He's from Colombia originally, but he runs a company called SCFO. And when we went to close H&M, the biggest challenge was the previous owner had acquired 4 companies, but he had never really merged all the financial data. We were using a line of credit on top of the AR. And if you don't have your accounting right, you're going to just get hammered. So we brought them in. They rebuilt all the accounting. As the day of closing, we had a whole new fresh accounting books that we rolled out. And we had then the US team did the main, and then we were maintained by a controller and a admin accounting level out of Mexico. And it dropped our costs just dramatically to do that. But then they had a system of all the management. And we ran that for a good 12, 13, 14 months. And then we found our controller. We had a system, and it just laid out very nicely for us. And so that experience was really great to work with a company that uses nearshoring, and we had a positive experience.
Yeah.
I'm actually curious to get your impressions of how it went. I mean, did you feel as if it were very seamless? You were working with great talent that just was able to understand, or did it take a little bit of massaging to kind of get the team to a point where they could really understand what the the business case was and what needed to be done? Like, I'm just curious.
No, it was not seamless. I think every transition to new groups and new people, but for me to go from acquiring a business to laying in a new financial system, and then if I brought in a controller, they would have had to figure all this stuff out. And for the cost, right? I got 2 top level accounting people that were working, really hard to make our accounting all day long work. And so there was some transition, there were some processes. We had a lot of, but the tools and the resources were at a fraction of the price for us to then be able to bring in a controller and transition. And then they were there along the transition.
Yeah, and I would say what made it a little bit less bumpy than it may be, Stephen, is it was a hybrid model, right? There was someone that was stateside that was meeting at the business closely, really,
And that was Dan.
much
Dan
more sophisticated, obviously knows it all. And then he is kind of helping work and train up the team, right? We weren't as involved in that aspect. And so that made it, it's another, again, there's a lot of ways to do it. I'm sure, Stephen, you've seen and done it all. And so, but again, it's a very valuable way to drive a lot of value from not too many dollars, right? So.
Yeah, I totally agree with that. And we also offer that hybrid model as well, because we do see the value in that. Absolutely. You have someone stateside who can kind of be the go-between and help make sure that the quality is what it needs to be. But I'm glad to hear that you had a positive experience with it, because that's what we see. And a lot of we've had clients that have stuck around with us since the beginning. Going on 5-6 years, where we're just always layering in new technical talent. But what's interesting is that the needs are getting more and more unique, where it used to be, we need some financial analysts and maybe a controller, fractional CFO. I'm not saying they're easy profiles to find, bilingual, experience working maybe with US or European companies. They're not easy to find in the Latin American market. They're easier to find. But now what we're getting are things like, we have a company, a manufacturing company that makes specific gaskets for hydraulic systems. And what we need to do is we need to create a lab with engineers in a place like Colombia where they can test these gaskets. And so for us, it's like finding a needle in a haystack, but that's the business model. The business model is to find the really hard to locate profiles and then offer them into the US lower middle market at typically a 30 to 40% discount of what you'd see in the United States.
Yeah, it's powerful. I mean, it really is. Being someone that has used the system and seen it, is it perfect? No, nothing's really perfect. Everything's got it. But we could not have gotten from A to D without that process, because by the time we got the accounting process done, the shift over, really consolidating 4 companies, getting a system and a process and a 13 weeks and a model and a budget, all this stuff that we didn't do, we paid for. And then to cut that cost dramatically by then handing it to a controller and handling it to an admin. And then them managing it allowed us to move on to other things, to then come back and then bring in our controller and them to train that controller to then level it out. And it just was, I felt like very beautiful, beautiful system. It did take active management. We had to be on top of it. It wasn't, all those things, but God, it would have been an arm and a leg. And I might have gone through 2 or 3 controllers that would have cost me, hundreds of thousands of dollars. Plus, it's more expensive to let go of some. I mean, it becomes a very burdensome process, because that person you're letting go isn't going to train the next person. But our team in Mexico,
especially as a plating company, your discipline is not accounting.
Right. And so, but they stayed in as long as we needed them to transition and train and all that stuff, because the nearshoring was like, shoot, you're paying us. We'll do it. There was no animosity, because that's the model. It was to move in and out. It was pretty amazing. So I think what you're doing is outstanding. And, it can help anybody.
And on that same vein, before we run out of time too, maybe what, you mentioned kind of independent sponsors, one of your largest customer base, right? Yep. What are the most common things they're using you for? And then, and that same question too, what are some of the things that they're not, that they should be thinking about?
Wow. Great question, Feras. So I would say, that first point is clear to me. It always starts with due diligence. It always starts with some type of M&A thesis with an independent sponsor. I want to acquire this small business or lower middle market company in the United States. And sometimes it could be as simple as, I don't know how to do it, or it could be, I need some additional resources to help with that transaction. And then what we do is that I take it to my team through Apertura, and then they can go in and help with whatever function is needed through due diligence. But then what usually happens is that we then start to see that there's other services that the independent sponsor needs as well. And I would say that the big ones that maybe independent sponsors aren't really thinking about, but really outsourcing their management, I'd say, their administrative functions is something that an independent sponsor should absolutely be considering. And a lot of the time, they don't know that, or sometimes they try to do it on their own by, hey, I'm going to go to a place like Upwork and try to find this accounting person or this virtual admin. But really, when there are companies, not just us, but there are other companies out there who can help with that and can take that burden off of an independent sponsor. Because in some cases, you guys know this, it could be one or two people who are in that group and nobody else. Well, you're not going to hire a large staff in order to do that. So outsource it. Work with someone who knows what they're doing, who can also give you flexible solutions as well. That's another critical point.
Because they've seen a lot and done a lot, right? So they can apply learnings from one thing into the thing that you may not have the context around.
Exactly. It's going to be more cost effective. And then also, I think, Casey, you were just mentioning this, you don't have to employ talent. Like, you can actually just outsource that through a contract. So you can move pieces in and out much, much easier. And I go back to this, the financial example. Casey, you mentioned this as well. Like, yeah, you can find controllers and you can find bookkeepers and CFOs in the United States. Absolutely. But let's say you're an independent sponsor trying to buy a civil engineering firm. Where are you going to get civil engineers? All of the middle market firms and companies like Jacobs, they are highly competitive on their recruiting, and they're going after talent as they're in university. So an engineering program, third-year engineer, is getting hired by those companies. How are you ever going to compete with that? You're not. So look for outsourced solutions that can help you both grow and then become more cost-effective as well.
Well, in that civil engineering example, actually, I want to ask you, how do you get around the certification aspects of it?
You're always going to need a U.S.
So if I'm buying that civil engineering company, I still need to have a plan for a person to give the final stamp, but somebody's doing a lot of the heavy lifting, right? And then that person is still reviewing, right? But instead of needing to solve for 10 civil engineers, maybe I solve for 2, right? And I have another 8 offshore that's doing the same kind of bandwidth wise.
And what I've also seen, especially with lower middle market or small business civil engineering firms, is that usually the senior engineers are sticking around, or they might not quite be at retirement age yet. But what's really hurting them is the backlog, is not being able to do junior level design work that can easily be done offshore. I'll just give a very quick example of this. We're negotiating a contract now with a middle market private equity firm. I mean, this is more of a larger player in the space. And what they're telling us is that actually it is really hard for even them to find that junior to mid-level segment. But you go to a place like Brazil, where we have 50 engineers in Brazil, it's actually fairly easy to find civil and commercial engineers there because they're graduating more. And the trick, though, is trying to find those who are bilingual, maybe have experience working abroad, or can easily be put into the system to deliver that work. But they exist. And whereas in the United States, it's much harder to find.
No, this is an incredible idea. It's actually run a couple ideas for me. So from a due diligence standpoint, we'll talk offline, but why don't you just tell me, or even just tell our audience, because I think a lot of people are thinking, wow, due diligence. Steven only works with, size companies this size. But what about the people that are on the lower end side of
the guy doing their first deal, a $5 million purchase?
Yeah. How do So what like,
Oh,
I mean,
yeah.
I know you're a fraction of the cost, all these things. Tell us real quick about that before we jump into our next segment here. Because I think that's the person that's listening right now, Stephen. They're thinking about, man, I've got a 1% due diligence cost, whatever I'm going to buy. So if I'm buying a, $5 million business, I'm going to have at least $50,000 to $60,000 worth of due diligence. How do I talk to Stephen and knock that down to maybe 20, 30? That's really the question here, because I'm interested in that too.
Yeah, so it's we were talking before the podcast about McGuire Woods, the independent sponsor conference, which I know you were at, Casey. I attended it this year as well. And I mean, so you have all these meetings, and I had probably 25 meetings a day, and every small independent sponsor, I mean, no life, even those looking at $5 million acquisitions, were all interested in that model because of what you just said, that they're already looking at some cases $75,000 in due diligence costs, whereas we're coming to the table and saying, we could probably do it for 20. And not only 20, but we have also subject matter experts that we can put into this to give you some qualitative data points on the acquisition as well. So it is, I think, their sweet spot in many, many ways. It's not even the big boys, the middle market. It's actually the smaller, lower middle market independent sponsors.
Love it. Quality of earnings and all these other things we can get into.
Yep.
That is great. We're going to put that company link in the bottom of the show notes so people can get a hold of you on that good stuff. But right now, let's jump right into our rock around,
where we ask our guests the same 3 questions. So, Stephen, first question, what do you like to do in your free time?
I have most recently, it's been writing. I actually have been writing a lot about macroeconomic and political considerations surrounding investment, both lower middle market and middle market investment in the US and Latin America. And I find it just to be so relaxing to be able to just write and then also read on those subjects. So yeah, that's all I do in my free time.
Are you blogging and stuff like where can someone read your stuff? Because I love that. I love that stuff, man. I just finished a book called End of the World is Just the Beginning. And it talks a lot about, globalization and a lot of the changes. And this book was written 10, 12 years ago. And now you're starting to see a lot of what he was talking about happening in today, where America's trying to push to. And it's just fascinating. I just love reading that stuff.
Yeah, I've been starting to blog more and more. Yeah, more and more on LinkedIn. Sorry, but yeah, I've been starting to use that more and more. Absolutely.
So I'm going to follow you on LinkedIn. And now, what's your most memorable moment in your business journey?
I'm going to give you a recent example. I would say one of the more memorable experiences was going into it was a true middle market company with our offshore team that didn't have a finance department. And essentially in 30 days, now this was a company that was pushing $400 million that had scaled so fast that they didn't have an internal finance function. And my team within 30 days created it. It was, and to me, especially when you're dealing with high growth company, significant challenges in just structuring the finance department. And I was able to get a group of 12 Colombians and Mexicans and Chileans and everybody on board to then roll that out in a very short amount of time. And so, I mean, I could go into the monetary examples and tell you, hey, I advised on this deal and that deal. That to me was special because it showed that the model works.
Okay.
Fantastic.
Awesome. And then last but not least, what's your favorite tool or resource?
Favorite tool or resource? I'm going to give you 2. So number 1, LinkedIn. I know it's become a little spammy, but I still find a lot of value in that. And I'd say, going back to Casey's point, thought leadership is really interesting on there. A lot of CEOs, a lot of capital providers are still using it as a platform to talk. And I think that as a tool has always served me well, and it still continues to. In terms of technology and tools that I use for my team that has, I think, been a game changer, Slack. For whatever reason, and I know it's kind of a hybrid tool, but I'm finding it to be very, very useful in terms of managing multiple teams in multiple countries.
Absolutely. Awesome.
I love LinkedIn, by the way. I live on it. I think it's fantastic.
All right. Awesome. Stephen, thank you very much. How can people get a hold of you?
So you can check me out, Stephen Marks, Emmersion on LinkedIn. You can follow our portfolio company, Apertura.co, and you can also look me up on EmersionCapital.com.
All right, awesome.
What a great call here, and really enjoyed meeting with you, Stephen. And thanks for being here.
Absolutely.
Yeah, thanks, guys. Good conversation.
No, thank you very much.
Appreciate it.
Thank you for listening to the M&A Launchpad Podcast. If you've enjoyed today's podcast and would like to support us, please leave us a rating and a review after you listen. I'm Casey Minshew, and I look forward to talking with you next week.